Hi, this is Jim Thomason of Bassett Software. Today I'm going to talk to you about setting up income in Debtinator. I'm going to open my standard tutorial that I've been using for the last couple of videos. As you can see, actually in this case, when I open it up, I received a pop-up that says, hey, something was already supposed to happen. In the transfers video, we set up a transfer from checking to savings of $100, which was next scheduled to occur on December 1st. Well, it's December 3rd, so this event's in the past. It says, hey, this should happen, right? I'm going to apply it, which is going to move everything over for me. Now I'll be able to continue. And you'll notice over here on the transfer screen, um, the memo line shows up in purple, indicating that something was just applied, and it's advanced the next date, so it says, okay, it now advances on January 1st. So now, that out of the way, we're ready to start moving on our income. Almost. Before we get into income, we need to take a quick segue over to the ledger screen to explain budgets. Back in the olden days, and you will notice here on the ledger screen while we're at it, the transfer that we just did was recorded, as well as the manual adjustment when we first opened the file and set it up with a $500 balance. Anyway, back in the olden days, people tended to use a budgeting strategy called the envelope method, which is a very good one. It's very simple. It uses a stack of envelopes. You get a whole bunch of envelopes and you write down on them things that you're going to spend money on. So you have an envelope for rent, and an envelope for emergency expenses, and an envelope for dining out, and an envelope for Christmas money, and an envelope for heating bills, and whatever else you need. And it works great because it segments all of your money. So you can very clearly say, okay, if I want to go out to eat, I'm going to go to my eating out envelope and take out whatever money's in there. And if there's no money in there, you very clearly know, well, if I still want to go out to eat, I'm going to have to take that money from something else. So sure, I get to eat out, but I can see that I'm taking it out of the envelope that I'd set aside my money for heating. It's a very good strategy to use, because if you just keep your money in a big pot, you're not going to know where it's going from or what you're using it for. That's when we all tend to fudge things. That's when we tend to say, oh, it's a big pot of money. I can sneak by and take an extra $10 out of it, because you didn't remember exactly where it was going. You just know you've got this big pool of money, and hey, you want to go out to eat. So the envelope method is really good at keeping things compartmentalized for you, so you know exactly where your money's supposed to be. The problem with it is it's a little antiquated. Most of us don't deal with cash anymore. Most of us tend to use debit cards or write checks, or we rarely handle money. It's all in the bank, and we're just shuffling numbers around. So Debtinator lets you work with that by segmenting your bank account into virtual envelopes called budgets. All it is just blocking up your account and saying, okay, it's all really still in the checking account and it's all in one spot, but I'm going to segment it off and use different things for different purposes. So that's why I'm on the ledger screen here, because that's where you set up budgets. And this will be covered in more detail in the ledger tutorial video. But all I'm going to do here is I'm going to go in the upper left is where we choose the budget. I'm going to go to the checking account. You can see it's already got a budget set up for debts and expenses. I'm going to add another one in for emergency funds. And then I'm going to add in a third one for Christmas savings. And those are important because now we can finally get into what we're trying to do in this video, which is adding income. Income is, again, just money coming into your account, any of your accounts. And it's important to include all of your income, because if you're not adding in something that that is some amount of money that you have coming in, then Debtinator doesn't know to work with it. It can't use it to pay down your debts. It needs to know. So every bit of money you've got coming in, you should add in here. I'm going to set up my payday. I'm going to say I paid $1,000. It deposits into my checking account, although it could go into my money market account or my savings account. I'm going to get paid on the 4th, which, again, according to our little calendar pop-up here, is a Friday. I'm not paid every month on the 4th. I'm instead going to change this to a custom repeat rule. I'm going to make it weekly, every 2 weeks on Friday, which now shows up. This is 100% of my income. Now, the reason I added the budgets is so we can set up some funding here. Again, the budgets Debtinator uses are all virtual. So you can only move money into budgets at particular times, and we've decided that you can only automatically fund money into your budget on your paydays. Now you can transfer money from budget to budget anytime you want, but this is the easiest way to get things set up initially. This just says when my payday comes in, block out a certain amount of money for certain things. And what we're going to do is we're going to set aside $25 per paycheck for emergency funds. And you see when I add that in there, it automatically decreases that I've now only got $975 going to my debts and expenses. And I'm also going to set $100 aside for Christmas savings. I'll go ahead and add in a second payday. We'll say this is my wife's payday. And we'll say that she makes $750. And her payment schedule is going to be a little bit different. She gets paid twice a month. So we'll set that up to say that her next payday is on the 15th. This is every month on the 15th. We'll go to a custom rule, and we'll change that to every month on the 15th and the 31st. Now, the Debtinator's smart in handling dates at the end of the month. If you set something to occur on the 31st and it's a month with only 30 days, it will map to the 30th. So instead of saying that in November she just doesn't get paid, it's smart enough to know that she gets paid on November 30th. Likewise, in February, she'd get paid on either February 28th or February 29th. Now further, there's another checkbox down here, perform on closest weekday. A lot of employers don't send out your checks or do their direct deposits if your payday falls on a Saturday. So if the 15th is a Saturday or Sunday, you're not actually getting paid then. You're getting paid the day before, the day after. So we're going to check that off here to perform on the closest weekday. That says that if payday the 15th falls on a Saturday, well, it's actually getting deposited on Friday. If it happens on Sunday, well, it's actually getting deposited on Monday. And then we'll click it off. You can see down here that we've got two quick snapshots that show up for us. We've got free cash for the next 30 days is $4,500, and income for the next 30 days is also $4,500. That's we're going to be bringing in that much money. The free cash is only so high because we haven't set up anything that we're actually spending our money on as of yet. Once we add in debts and expenses, those numbers are going to go down. So that's all the information that you need right now to set up income. So thank you for listening.